Hello! We're continuing our series to help you evaluate your options when choosing a home loan that makes the most sense for you. Over the next few minutes, I'll discuss how to choose a loan that offers the lowest total cost of ownership. Basing your mortgage decision on the lowest total cost of ownership certainly makes the most financial sense of all your options, but that doesn't necessarily mean that it's the right decision for you today. For example, many people will find their primary motivation today is related to the absolute lowest monthly payment, or their decision may be driven by the amount of funds they have available to purchase a home. To determine the lowest total cost of ownership, your PrimeLending home loan expert will evaluate several aspects and may make different recommendations related to your interest rate, loan product, loan type, loan term, alternative PMI options, down payment and/or loan amount, credit score, your debt ratio, assets, and more. You may know that you want a 30-year fixed-rate mortgage, but you likely also know that you're not going to make 360 payments and keep today's loan to term. Determining your lowest total cost of ownership requires you to put real thought into how long you're likely to keep this mortgage, not how long you plan to keep the home. In other words, the mortgage doesn't just end once you pay it off or sell. It also ends if you refinance and take on another loan. If you've seen other videos in this series, we've addressed scenarios that may impact how long you're likely to keep your mortgage. Examples include interest rates fall, making refinancing an option. You improve your credit score. Your family is growing. Your home needs renovations, updates, or repairs. Your income increases or decreases. Unexpected expenses cause you to withdraw equity, or relocating for your career. Evaluate these types of situations with your PrimeLending home loan expert, and you'll receive loan options that will provide you with the lowest total cost of ownership over the given time period, ultimately leading you to the best financial structure based on your unique circumstances. I encourage you to be open-minded. You may have approached your new mortgage with a plan to put 20% down so you could avoid PMI on a 30-year fixed-rate mortgage. But your loan officer may give you an analysis recommending you put 10% down and pay PMI in order to pay off unsecured debt that is more costly. You might receive an analysis that recommends taking a higher rate and reduced fees. Or you might receive an analysis that recommends paying additional fees to receive a permanently lower interest rate because the long-term savings will be more beneficial. At the end of the day, it doesn't matter what an analysis says. It matters what you're most comfortable with. What is important is that you understand the pros and cons of your unique options so that you can make an educated decision. For more information on determining the lowest total cost of ownership or any other mortgage-related topic, please reach out to your PrimeLending home loan expert.